Hello, hello, hello. What's going on, everybody? Can I get a audio and visual check in the YouTube chat before I start, please, if anybody's here? You guys should be able to see the usual screen. Right now we got the equity markets up here, and hopefully you guys can hear me loud and clear. Okay, welcome to a Capital Hungry Monday market update webinar, as well as trade ideas webinar. I apologize for the late start, as I had some family stuff come up earlier and I was not home. So obviously, usually I start at 7 p.m. Eastern, and we're a couple of hours late here, but we're still gonna get it done. We're still gonna do our analysis, review economic events, market sentiment, fundamentals at play, and then take advantage and do some analysis technically and fundamentally across gold, GJ, GU, EURUSD, USDCAD, as well as US30. Okay, so let's start off with some of the economic events in focus. By the way, these market update and trade ideas webinars are usually primarily for the next couple of session periods, maybe for the next couple of days, but it depends on what fundamentals and economic events we have later in the week. Most of the time, they're just some intraday and scalp trade ideas shared in this potential webinar to set up for anybody who's going to be trading London tonight or New York tomorrow and so forth. Because the reason why I'm saying that is I pretty much see the markets setting up for the FOMC we have on Wednesday, and I'm going to explain that shortly. But anyways, in terms of the economic events that we have tomorrow, keep in mind that it's a holiday for China. At 8:30 a.m. Eastern, we have the US building permits data, and then that's pretty much it in terms of economic data, with what we have coming overnight as well as in the morning for New York session. And then during Asian session tomorrow, we have the People's Bank of China loan prime rate, and then followed by the Bank of Japan monetary policy statement. This week is a heavy central bank statement week, as besides just Bank of Japan, we also of course have FOMC and the Feds on Wednesday. We have the Bank of England later in the week as well, and then we have Jerome Powell speaking again to close the week off on Friday. So I do see a couple of scenarios to come that I'm going to be listing out in the short term when we start to look at the charts here. I just want to make sure we go through the nitty gritty of the economic events and the current fundamentals at play. So as you all may have noticed, that as we're coming towards the end of Q3 and potentially setting up the order flow for Q4, the equity markets across various regions, primarily Euro region, UK, Asia Pac, and North America, has been doing a pretty aggressive pullback and dip from all-time highs. In my opinion, I just see this still as a dip being set up to potentially set up buys to come with FOMC and the Federal Reserve interest rate, as long as they continue to delay tapering and keep financial stimulus active for the US economy, meaning keeping their asset purchase program active, quantitative easing active, and so forth. So as we've seen the US dollar pick up some short-term strength, we've obviously seen the correlated impact on the equity markets doing a pullback. So in the short term, we've actually had more safe haven currency strength in terms of looking at the Japanese yen or the US dollar, and we've seen the equity markets do a pullback. In my opinion, this is all timed very well. And what I mean by that is it's all sort of prepping for the interest rate decisions to come, as well as, in my opinion, setting up the buyer order flow on the equity markets for Q4 to run into the end of the year into 2022. So the focus is still on the central bank rates, and the main focus is on US dollar movement, because we understand that US dollar domination has been very strong due to the Federal Reserve's massive asset purchase program. The Federal Reserve is essentially the one who has kept a lot of commodities, as well as mainly the US stock market index, so extremely bullish through their ETF purchases. Obviously, the other methods of injecting money into the economy such as corporate bond purchases, government bond purchases, quantitative easing, and so forth. So the main question that investors have been looking at is, will the Fed start tapering, or will they just continue stimulus? Because this is what's really going to have a key impacting factor on dollar value, as well as stock market movement as well. So pretty much to summarize, if the Fed keeps everything status quo like they have over the last year and a half, and they still see risks with Delta variant, they still don't see enough people vaccinated, and that's just what they usually tell the media, but they keep everything status quo in terms of keeping stimulus active, saying that, hey, we haven't reached maximum employment yet, yada yada. We're still going to keep stimulus active. We're still going to keep the economy in an accommodative state. If that's what we see, if that's what we see come up on Wednesday, then we're going to see the dip on the stock market get bought up and continue bullish. We're going to see dollar turn bearish, and we're going to see gold also continue bullish. And after gold has done that dip, equity markets have done that dip, and obviously dollar has had more of an upside move to grab sell orders from better positions, which I'm going to show you guys in the chart in a second. So that's the main focus, which obviously that is on Wednesday, and then Jerome Powell speaking again on Friday. Through this webinar, we're still going to list out some intraday trade ideas overnight, but I want to go through some of that macro stuff first. So for example, when I'm looking at the US 30 and I'm going on a daily chart here, you can see this pullback in a correction from these new all-time highs that were peaked is nothing out of the ordinary. The way the market trends, especially when you're moving in bullish fashion and with the support of the central bank, is we've pretty much just had impulsive highs created, profit taking by buyers, sellers jumping in hand, bringing prices down to more favorable demanded price points and buyer order flow being fulfilled, and just continuing back bullish to these highs and all-time highs again, as long as that stimulus stays active. So technically speaking, as long as Dow Jones is above 33K, it is still very bullish. I only see us breaking below 33K if the Federal Reserve starts to reverse what they did that kept these markets so bullish. What would that be if they start to reverse what they did? Well, that's decreasing the asset purchase program. That's reversing the quantitative easing. That's starting to taper off the support that was given to the economy, which would have the impact of dollar bulls, stock market having a potential deeper, slower correction to potentially 30K previous pandemic levels, like pretty much what we saw as a repeat of post 2008. And gold would also go bullish, going back down to 1680s and so forth. So dollar strength is only going to come fundamentally if the Federal Reserve confirms that they are going to follow the process of tapering off the stimulus support. But remember, we have to look at this through the eyes of the Feds and the eyes of the people who have been benefiting and gaining from the stock market being so bullish, right? We have to understand that this tapering process is going to be much slower, much more patient, and much less aggressive than the stimulating of the economy process, which has been literally artificially pumping up the markets. Like I've shown you guys so many times, the same time we had this devaluation on the dollar and going extremely bearish because of the money supply increase and the Fed's taking that money supply and essentially injecting the economy and markets, and the dollar went from 102 all the way down to 90, is the same time stock markets have been extremely bullish. So when I'm looking at dollar, I can only see dollar break above 94 price point, the last price sensitivity area, maintaining bearish market structure, where we had seller order flow come in from this double top leading to these new lows. You can see, even though we've had some upside plays, we've had yet to break above that significant price point. I only see us breaking above 94 if we get confirmed that the Federal Reserve is going to taper and turn that faucet off of money supply injection into the economy. But what is the probability that they're going to taper? I think that they're not going to start tapering yet. Because if you're a part of the 1%, if you're a part of the market makers, if you're a part of the elite that's riding this wave, why would you want this to stop? In my opinion, does this not look like another regular dip that the stock market does after highs have been printed? Or does this look like a free-for-all or crash? No, it just looks like a regular dip that the stock market does when buyers peak new highs, profit take, and create that pullback phase, right? So the key make or break decision point on US 30 is 33,000 technically, and we're only breaking below 33,000 with tapering confirms and the Feds reversing what they did to inject the markets. We're only breaking above 94 on the dollar with tapering confirms, and of course if we get the Feds to do what I just said. But I don't think that's going to happen. I think that this pullback on the stock market and on other regions, as well as this upside move on the dollar, is just to collect more seller order flow, and the Fed's pretty much saying, hey, there's still risks with COVID, there's still risks with the Delta variant, as well as we're not seeing maximum employment, we don't have full economic recovery, we're still going to keep the economy in an accommodative state. If that is the case, we might get a liquidity grab to get more seller, to collect the seller order flow from that 94 price point. But if we don't break above 94, as well as don't get the confirms of tapering and the Feds keep everything status quo, which this is my main bias, is going back into dollar weakness mode, as well as this dip on the stock market getting bought up. Even if we dip down to 33K, I see this dip getting bought up for FOMC or post FOMC if they keep everything status quo. Okay? If that is the case and they keep everything status quo and stimulus active, then investors are going to continue to ride this wave in the money train, and you're going to obviously just get that dip created, buyers jump in and see the same trend we've been seeing for the last year and a half. Okay? And on the inverse side, we're going to see dollar reject this price sensitivity area and turn bearish. And we're going to see gold continue back bullish after this dip low was created. Why would gold continue bullish? Because if stimulus stays active, that means that US economic inflation is still going to be increasing in the short term, which the Federal Reserve is perfectly able and perfectly ready and sacrificing those inflation increases, because the inflation increases don't impact the 1%, the ultra rich, or them. This process of increasing the supply of the dollar and injecting the financial markets and US economy has led to inflation and cost of good increases for the working class citizen and the day-to-day worker in the middle class. But it's also the reason the US housing market, commodities market, and stock market has been so bullish. And guess who benefits from those markets being extremely bullish? The same 1%ers, right? So if the Feds keep everything status quo, which is my personal bias and what I personally want as well, then we're most likely going to see a repeat of this type of market structure. And if we can cleanly fail to break these lows, can't break these lows, even if we get a deeper liquidity grab and we break above that rejection point in 1764 and stimulus stays active, the benefit of having dollar weakness as well as inflation increasing, we're going to see that gold get bought up from 1764 and correct that downside move. Okay, so this pathway of price on gold for FOMC, as well as the bullish pathway of price on US 30 and the bearish pathway of price on the dollar, is only if the Feds keep everything status quo. Stimulus active, interest rates remain low, economy in accommodative state. They can give little whipsaw, seesaw comments as they do, because that's just how the Federal Reserve is, and say, hey, we're starting to see economic recovery, things are looking better, but the focus is, it doesn't matter about that noise. Are you going to taper or are you not going to taper? That's it. If they say they're keeping everything status quo, this is the pathway of price you can expect on gold for FOMC day. And on US 30, you can expect us to get this dip bought up and continue right back bullish, chugging back to previous highs. And you can expect dollar turning back bearish to start heading back down to 92 and 91. This would also mean if stimulus stays active, these lows will get bought up on pairs against the dollar like GU as well as EURUSD, as we're coming to those key higher time frame demand zones again that have not broken since August, July 2020, right? Key demand zone that we're coming down to again on EURUSD. Key demand zone that we're coming down to again on GBPUSD that we failed to break below, right? If we fail to break below these areas, as well as have that stimulus stay active and dollar turn bearish, then we're going to have a repeat of this dip getting bought up on GU. We're going to have a repeat of EURUSD continuing up. UCAD's going to go bearish after rejecting this previous high. We might get a dollar price grab, and then if stimulus stays active, UCAD will continue bearish, because dollar being bearish as well as stimulus staying active also means oil bulls, and oil still staying very bullish. So then you're going to have the double whammy of dollar bears and oil bulls supports Canadian dollar strength as well. And you're going to have that downside move very similar to this. Okay? Does that make sense for everybody? I didn't say any intraday trade ideas or scalps yet. I'm just giving you guys literally fucking nuggets for FOMC and the interest rate to come. A lot of this might go over your head and you might need to research some of the verbiage I'm using, but does that make sense for everybody so far? Personally, I just see the dip on the equity markets as well as the pullback on the dollar really just setting up the order flow for Q4 and really just setting up for the FOMC and the Feds to say, hey, we're still keeping everything status quo, we're still keeping stimulus active. Okay? Now, I'm not always right. My personal bias is that the Feds and the 1% and the people who have been riding the wave of the housing market bulls, oil bulls, stock market bulls, they don't want this greed train to stop yet. Because why would they want it to stop yet? Why not keep it chugging into the end of 2022 and keep extending their financial gains and generational wealth? That's the way I see it. We have to look through it in the eyes of the people who are benefiting off this. All right? GJ would also continue bullish as well on the higher time frame because yen would continue bearish with that overall market optimism of investors still riding the wave of risk currency strength against safe haven currencies. Okay, and I'll talk about GJ in a second as well. Okay, but listen, just because I think stimulus is going to stay active and that's my 2 cents doesn't mean I'm always right. The only way I'll sell US 30 is if we get tapering confirmed. If the Fed say, you know what, the economy is looking good, we're going to start tapering. I'll sell US 30, break and retest below 33K, and hold to go down to literally retest previous pandemic highs at 30K. And I'm going to show you why I expect a larger correction if we get that confirms of tapering. Because let's reference 2008. So this in 2008 was the actual crash of 2008, financial market crash, mortgage-backed securities going fucking poo-poo garbage, leading to a huge spider web of economic uncertainty and that financial market crash. You can see, same idea. As the Fed started to support the economy, you have this very strong bullish structure. You have very minimal pullbacks and continuations to the upside. This larger pullback here, which is not a crash, but still is a very large correction, comes when the Fed years later starts to taper off the stimulus support. And then when they actually rise interest rates, you get this correction here. So this larger correction, where you break below that price sensitivity area and come to a previous price sensitivity area, was from tapering of that support. This larger correction was from interest rates actually rising. That 2014-2015 period. Do you understand? if we don't get the same confirms of tapering of the stimulus support, we can't expect that type of correction. So that is why if we do get those confirms and the Fed throws us a curveball, I can expect us to get a deeper correction, to get not seeing a crash, but just a deeper correction like we saw post 2008, going to pre-pandemic highs, which would be larger than any other dip we've seen, and it'd pretty much be in this process there, right? But Timbuktu, you have to keep in mind though, it's not going to be a year in this situation. The correction in this situation might be weeks to months, because think about it. Was the pandemic crash and the recovery in the same time period as the 2008 crash? No. The 2008 crash was a lot slower and the correction came over years, right? So here, this crash pretty much went from July to the end of 2009, right? If you guys can see the dates over here. And then the recovery took 3 to 4 years after. The overall crash we saw with the pandemic and the recovery is 10 times more accelerated and much more surgical than what we saw 2008, right? So you can see the crash here was almost a year long, and then when you're just scrolling here and looking at the recovery to get to pre-crash levels. So pre-crash levels are here, right? Pre-crash levels took another 3 years, right? But here, the crash was literally like 2 months, right? The crash was only 2 months here with the pandemic. Same size of crash, but much more accelerated, much more aggressive. Literally a couple of months the crash, right? Not even. Few weeks was, like, we'll say a month and a half crash. And the recovery to go to pre-pandemic levels was literally 6 months. And now you have to understand we're 5,000 points above pre-pandemic levels. All right. So anyways, I only see us breaking below 33K on Dow Jones. I only see us breaking below 1740 or 1740 and going down to these previous lows on gold. And I only see dollar continuing bullish above 94 if we get the confirms by the Feds that they're going to taper and they're going to stop that support for the economies. Does that make sense for everybody? So to summarize, if they keep the greed train running, if they keep stimulus active, if they keep extending their financial market gains, and they say we're going to keep the economy in an accommodative state, dollar bearish. Gold bullish, stock market bullish. If they do the reverse of that and throw a curveball and say, you know what, it's time to start tapering, dollar bullish, gold bearish, stock market bearish. Everybody understand that? All right. That the first start of this webinar was primarily a little bit of extra gems and FOMC and Federal Reserve interest rate prep. Now I'm done with that. Now we're going to go back to some intraday trade ideas and what we're looking to take advantage of over this next hourly and session period. All right. Then you should go watch him instead of always coming to watch me, because you fucking love to watch me. I would love to watch me too, but I can't blame you. Okay, so now what we can see in the short term is Japanese yen from its lows is still holding strength within this range. GBP and JPY interest rates are pretty much going to be status quo and literally cause some whipsaw movements and possibly get GBP to get bought up from its lows. The main focus is the Feds. Main focus is US dollar and the Federal Reserve. All right. Now, and dollar is also still very bullish, just doing a pullback, retesting a previous zone, similar to like how we saw here and similar to how we saw this jump from these lows as well. Okay. So overnight, if dollar fails to break below 93.15 and we get a potential double bottom here and continuation back to these highs, as well as Japanese yen strength, and our equity markets across the regions continue a bit more bearish or stay flat, then here when we're looking at gold, you can see we have not broken above 1764 yet. So if we get dollar strength overnight and break back below 1759, I would still look to play this higher time frame range we are in, because I can see us staying in this range till FOMC. You get what I'm saying? So what if we continue to reject these high points, break below 1759, I would look for sells back down to the range lows, right? If we come all the way down to the range lows again and fail to break, green box is still a high risk, high reward buys. I would only be looking for safer buys on gold if we break and retest above 1772, clearing this price sensitivity area, showing a lot more buyers order flow and momentum, and then I'd only take buys from that area. So pretty much what I'm going to be looking for is if we continue to reject these highs, flip bearish, break below 1759, take that down to 1750s. And you can also scalp it accordingly with those same confirms, right? The only U.S. economic data is the U.S. building permits at 8:30 a.m. Eastern. And we do still have some uncertainty and doubt with the short-term impact from the China Evergrande situation, which has also led to an impact on global equities having a bit of a decline and safe haven currencies just having a bit of strength. The same time, we're going to set up for FOMC and coming towards an end of a quarter, getting some rebalance of flow moves to set up for the new quarter. So red box is sell area, green boxes is where I'd be looking for buys. Okay? For our other dollar pairs, like GBPUSD, you can see we still have the potential to dig a bit lower into retesting this demand zone in previous lows. And we're still relatively bearish, but this is going to depend on dollar strength or weakness overnight, and if we remain below 1.37. So the same time dollar's doing this pullback to retest this area, if GU retests 1.37, I would still be looking for sells as we've had a break of bullish market structure, very strong bearish price action. This is just looking like a bit of a support and a pullback area being created, right? And I'd still be looking for sells as long as dollar remains bullish with retests at 1.37. Or if we do something similar like this and just create a consolidation zone, breaks below 1.365. I would only even attempt looking for buys if we come down to retest the previous lows to the left at 1.36, which is coming to that higher time frame demand zone. Or safer buys if we correct this downside move and come above 1.376. You have to understand, because the US dollar is the world's reserve currency and because dollar domination has been so strong, it doesn't matter what pair it's against. It's great to look at the dollar correlation in movement. So if you see this pullback and we still reject 1.37, right? Then I'd still be looking for sells, or if we just create a consolidation zone and break below 1.365, I'd only be looking for buys at the green box zones marked out. Okay? USDCAD is moving exactly the same as dollar. So at the same time dollar peaked those highs and is doing a pullback, is the same time USDCAD is as well. I'm going to be looking for buys on USDCAD at this medium term zone at 1.277, or if we break above these candle body highs at 1.285. I'd only be looking for sells on USDCAD. Even if we come a bit deeper here and we don't get the clean price action confirms at 1.277, I would just let the pullback take place, and I'd still be looking for buys at potentially 1.27. I'd only be looking for sells if we could come below this liquidity zone and confirm the dollar weakness on FOMC day. Otherwise, I still see dollar chugging to the upside in the short term. Okay, US 30. Now, US 30 is at a very key price point of interest, but we've seen this corrective structure still being respected, and I don't see US 30 continuing bullish really in the long term until post FOMC sentiment. So I could still see us come up to 34,300, reject, and come right back down to retest these lows and previous lows at 33,800. If we come up to 34,300 and fail to break, I'd still be looking for sells here, and I'd only be looking for buys at a double bottom at 33,800, retesting that previous low and showing us more sellers exhausting out of the market and buyers jumping back in, shifting the momentum from that area. Or the safest buys is if we come back above these previous lows, correct this downside move, and come above 34,600. Okay? EURUSD is going to be a very similar setup to GBPUSD and our other pairs against the dollar. It looks like we're just coming to, after having very strong bearish price action, right? So we're having the double bottom technically just shows me sellers like for example, if you're coming to push down in price, right? And you come to a higher time frame demand zone, a better demanded price point for buyers to jump back in. You might have your initial reaction, and then that shows you your first sign of rejection. But when you get another retest of that area and fail to break, potentially behind the scenes, it shows me sellers exiting out of the market further and buy orders being fulfilled to continue back up to this point and then continue a lot higher to the upside. Right? So what that tells me technically, when you do have that take place, for example, like in this area sort of, even though it dug a bit deeper, we're just going to look at this area, is you have your initial seller move, you start to get some buyers exhaustion upside move. Here, this was during ECB last time, but you essentially snap back in this area, showing a lot more sellers exiting out of the market and buyer order flow jumping in. And besides the double bottom itself, you can also see the price action shift. Instead of having very strong bearish candles, you start to get some bullish engulfing candles and weaker bearish candles. You come back up to that initial double bottom leg price point and continue up a bit higher as well. That's just what it tells me about the order flow behind the scenes, or what I can read with that information. But anyways, so EURUSD, even though it's been a bit messier, this is still the general consensus it's been following, with much larger and stronger bearish candles continuously printing intraday lows. As well as just these little weaker pullback phases or consolidation periods and continuing back to the downside, right? So if we can have a pullback here to 1.176 zone that we had the previous breakout, I'd still be looking for sells at this retest like we had here, the breakout here, and so forth. Or if we break back below this zone and take the sells from here, because we might not get that deep of a pullback. So if we, for example, just like have a bit of an upside move, don't reach our sell zone, like similar to like this. See here how we had a low printed? We didn't get as aggressive of a pullback to retest the trend line or the previous zone, but you do have a bit of a pullback. But then as you break back below our zone, you continue down. So if we don't extend to a full pullback for the better risk versus reward sells and just dig a bit into the zone, if we come back and have sellers jump back in and break back below and dollar strength, I'd still be looking for sells after that pullback back below this area. Or if we retest 1.176. I'd only be looking for buys on EURUSD if we grab liquidity from that higher time frame demand zone and price sensitivity area to the left, or if we were to break back above this bearish market structure that's being respected. Okay? And GJ, you can see with the Japanese yen strength, right? Dollar obviously has held that short-term strength. You can see here with how it's been trending bullish, just creating these zones, breaking to the upside, pullbacks and continuations to the upside, right? And obviously that equity market decline, UK equity markets here, the FTSE 100, just showing us a bit of a drop in investor confidence within the UK markets. Pretty much the same as majority of markets are been slumped towards ending of the quarter now. We still have this bearish market structure being respected and very strong bearish price action. Even though we're getting a bounce from the previous lows, I can't go out of the seller's bias yet because we've still had this very strong bearish price action and break below that liquidity zone of 200 pips. So even from 149.2, if we come up to even 150.2, that's still only a 50% correction of the impulsive play below this liquidity zone here. It would still only be a 50% correction. So what I do possibly see is some short-term buy scalps if this momentum continues and we do get that pullback play, right? But I can't see any long-term buy. So for example, if we reject 149.5, come above 0.800, then I can see us having this pullback play where as a scalper, you could take advantage of that pullback from above 149.8 area, obviously. But as long as we don't break that 50% correction point in this bearish market structure forming, and we don't fully correct this downside move, and UK equities continue a bit weaker, I still see sells from this area, or obviously the safer sells below 149.2. Okay? So in the short term, leading up to FOMC and the interest rate decisions, I still am seeing the potential for equity markets to stay a bit more bearish or just start to consolidate at the at these dip lows. I still see the potential for some short-term yen strength standalone, as well as dollar strength as well. Dollar can do a bit of a pullback. It's still very bullish when you're looking at just since the last couple of weeks here, right? You can see this nice upside price action. So those are the trade ideas for gold, GBPUSD, EURUSD, USDCAD, US30, as well as GJ, and going over some prep at the start of this webinar for some what to expect with FOMC and the interest rate decision, as well as intraday trade ideas and going over the economic events we have tomorrow morning and overnight, the China holiday to keep in mind, Bank of Japan monetary policy statement tomorrow during Asian session around 10 p.m., but usually it's tentative. And these key fundamental points that I have been focusing on. For anybody who's asking questions about how to take entries or how I enter or how to do analysis and all that, I don't want to make this webinar too long. It's just a Monday market update. It's not like a live trading session. Just remember, the Capital Hungry YouTube page is an endless supply of information and what I've learned over the years, sharing that process. You can go see how I did AUD USD analysis 1 year ago with 300 views, or you can go see a scalping series with 20k views, or gold analysis, oil from back in the day, central banks, freaking greatest transfer of wealth. higher time frame, timeline, and full breakdown of GJ economic events and fundamentals over the last 20 fucking years. literally a 20-year fucking breakdown over here. Right? So yeah, tons of webinars and stuff here you guys can take advantage of. Psychology webinars, analysis. We called the crypto shorts from 50K on Bitcoin. Those are still active. That was like a month ago now, 3 weeks ago. We were calling the crypto shorts. The crude oil buys here, we called from oil buys, we called from 62, 66, and 70. Where are we sitting at oil right now? 70. So 62 buys and 66 buys played out. This crypto stuff played out. You have other market update webinars, a bunch of stuff. The Capital Hungry News Twitter, which is a better source than Forex Factory. And a lot of these other news terminals. This fucking Trudeau, man. Piece of shit. And the Capital Hungry free Telegram analysis channel. If you want to really upgrade and learn more, then you can always join the Capital Hungry Aristocrats, the Lions, in the private channel. But that's a paid service. But before the paid service, there's tons and tons and tons and tons of free content. There's over 100 webinars on the YouTube. And this news Twitter has already posted 21,000 headlines. And this Telegram analysis channel literally has been... This Telegram analysis channel has been running for 2 years, showing my trades and process for years as well. So, all right, everybody. Thank you for attending. Yeah, we talked about it, Honest Trader. Fucking some of you guys, man. I can't be surprised by the YouTube IQ. I'm just here to share what I've learned, my viewpoints on the markets, some potential trade ideas, news, fundamentals, psychology. So thank you everybody for attending. Thank you for the support. Make sure to share this around. Don't forget, this webinar itself is always saved. So if you missed it or you missed anything, you can always rewatch it. I will see you guys on Wednesday morning for the New York live trading scalping session at 7 a.m. Eastern. All right.